Decision Plus has been and still is a leading stock market service provider. From training to coaching, we cover it all. Try both our software as well as our coaching site, completely free for 10 days without obligation. No credit card is needed to sign up for the trial. The trial subscription will be automatically canceled for you at the end. DecisionPlus.com, your stock market service center. Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try MarketGurus.tv free without obligation for 10 days in the menus above. Market Vision Plus is the trading companion of so many investors. Make your fundamental and technical analysis easy with Canada's #1 stock market decision-making software. Research, decide, and follow your positions with Market Vision Plus. See the menus just above this program and try Market Vision Plus for 10 days without any obligation after the show. When it comes to day trading, Trader Plus is the right tool. Track 50 quotes simultaneously. Create dozens of quick lists. Display as many as 30 real-time intraday charts at the same time. Watch the action with candlesticks or bar charts as fast as 10 seconds. See the market by sectors. Use the chart models already prepared for you. Try Trader Plus for 10 days in the menu above without any obligation.
Hello everybody, welcome to the Swing Trading Show. Today we're Tuesday, September 15, 2015. Markets today, folks, are markets that are going up, but going up slightly. Still, we have markets that continue to remain stuck within their sideways formation. Even if there are some sectors that are rallying, I'm talking mostly in the US because it's mostly in the US that the rally is a little bit stronger. One particular sector that we're waiting for before putting into a bullish cycle, which is the healthcare sector, we want to be a little bit more patient because even if it's slightly breaking out this resistance, we want to see more increase or the pursuit of the rally with a stronger momentum before putting that sector into a bullish cycle. Is there any particular sector that is standing out and why the TSX rally is lower than the American markets? Is because on the TSX, the sectors that are stronger are sectors that have less weight. For instance, technology sector is not rallying as strong. Industrial sector is one of the strongest rally, but sectors that have more weight, such as energy, financials, gold, mining, are all staying neutral. So this is why actually on those sectors, though, the opportunities for day trading have been limited. However, there have been some exceptions in the energy sector because this has been one of the best sectors to do some day trading. I want to bring to your attention one particular stock that was recommended on MarketGurus.tv that you can have access for free for 10 days. That stock has been Cardinal Energy. And Cardinal Energy, if we take a look at this stock here, intraday-wise, it was kind of tough to determine the entry point because usually what we like to have on a stock is to have first a sideways formation and then a clear breakout. But on this one here, it was mostly a clear pursuit of the upward trend. Therefore, you could have trend trade a stock like CG. Now, the stock is already surging by 802%. Now, if we take a look at the moving average on a daily chart, we see that we're just testing the 10-day moving average. So if the stock cannot, during the day, go above 930, 935, for me, that's not a stock you should have. That could just be a short-term upward momentum that might stop here because overall, we still have this downward trend that is maintained. And it's a situation in the energy sector where even if oil is having a slight intraday rebound, the energy sector trend is still on the downside. So therefore, the trend is your friend. There are some short positions that have been at risk. For instance, the strategy that we have favored on the marketgurus.tv is to make sure that we can actually cash in, maximize our profit in some of our short positions. For instance, we had one short positions here in the energy sector, which is Clearbridge and American Energy. Well, today it's having a rebound, just like a lot of stocks in the energy sector, but it's really a slight rebound, only 0.59%. But around 1090, that's a stock where we're going to actually take some profit on. We did recommend that stock as a short here on September 9th when the stock broke down out of its neutral range. So that was a nice short opportunity. Now at 1090, we might close totally that position. So therefore, folks, in terms of the other indices, what we have on the other indices, we had today the Central Bank of Japan that kept their monetary policy unchanged, their quantitative easing program unchanged. Don't forget that on Thursday, the Fed will take their decision concerning whether they're going to raise interest rate or not. So all eyes are on the Fed, because the central banks all over the world, but the major economies, the central bank of the major economies, Japan, ECB, China, are all being accommodative. Also, we have the Hang Seng here that continues to be negative, but continues to stay stuck within its neutral range, but it's putting some pressure on its support because there's still some worries concerning the economic data of China. Mostly the data that came out yesterday, mostly the industrial production. Retail sales was good, but industrial production wasn't as great. So this is why the index continues to weigh in negatively. In terms of the England, well, we have inflation numbers that came out, and we had in Germany the ZU Confidence Index that came out, which is slightly higher than estimates. So this is actually something that's good. So this is why the FTSE is rallying. But you see, just like the American indices, the FTSE, the Hang Seng, the Nikkei, all indices are staying neutral. So it seems like it's a worldwide thing where all investors are in a waiting mode. So just to tell you folks, the question bar is open. If ever you have any questions, feel free to ask them. I'm just going to continue here with some news here, news about this Xenoport. It's kind of bizarre because the company said today that they had some success concerning one of their study for a drug for phase 3. Now finally the stock took a big hit. So we kind of don't understand why this happened though. So this is the risk with healthcare stocks though. So definitely it's kind of frustrating for those of you who bought that stock here or there. Now it's a clear opportunity to get out on that stock because the next target is $4. So yes, poor shareholders of Xenoport, and they said they had some good results. Energy 21, they want to redo their earnings statement. So the stock is continuing to stay flat. Talking of energy stocks, there's a news today saying that according to Canaccord Genuity, several energy companies will have to face tougher credit conditions because banks might cut their credit line by 15 to 20%. And the reason why though is because when a bank gives a credit line, they give the credit line based on the value of the assets. Now the contracts that those explorers or oil producers have bought before actually are maturing in the next few months or years or so. So the new contracts they'll have to negotiate to sell their products at a fixed price and to negotiate the credit line, well, those new contracts will be based on the actual reserves. And the actual reserve with the low oil prices, well, they're going to be impacted negatively. Therefore, banks won't lend them as much. So this is something that's actually negative. That reminded me of what Energy 21 is doing because they're redoing their annual statements. So I'm definitely think that a company like that might definitely be have more deeper problems, especially with the weakness of oil prices. Now, Teck Resources, the stock, their bonds, have been downgraded to junk status because of the weakness of the oil, of the commodity prices. So really, Teck Resources is nothing positive. It's a stock that cannot escape the wave of sellers that we have seen. Worries about China. Of course, China is the biggest coal consumer. So if ever the Chinese economy is not growing as strongly, they're going to consume less energy. So this is one of the reasons why investors are punishing Teck. Dalian Resources, they announced a private placement. So this is one of the reasons why the stock is going down because they're issuing some shares. So more shares, more dilution. and this is why the stock is breaking down today. Silverwater, they said that they're going to buy back some of their shares, about 5% of their shares. Sunopta is going down because they will also issue some shares, but those shares that will be issued will be used to fund a previous acquisition. And those are actually the news that we have. So really calm in terms of news. In terms of a sector in particular, there was an attempt to potentially start a bullish cycle. For instance, Trina Solar, it's actually confirming a breakout right now. As I said, if you're a subscriber of MarketGurus.tv, every day you're able to see a list of stocks on the analysis and advice sections of stocks that are about to be breakouts and breakdowns. So it's usually published around 11:30. And for instance, you see here Trina Solar. So around 11:30, the stock was still neutral. However, the fact that it was testing its resistance, it was close to confirm a breakout. Finally, the stock broke out. So what this list allows you to do on MarketGurus.tv is to actually put some stocks on your watch list, set up some alarm, right? So whenever you have the stock that can break its intraday chart, that triggers your buying point. So Trina Solar, is it a nice buy? I would say the thing is there's a 50-day moving average that's there. So it's a short-term buy, 974 maximum, close to the overbought situation. Those are all the things I don't like with Trina Solar, but it's a short-term breakout for a short-term gain until 968 and 974 on the Trina Solar. We still have this downward trend there that has not been reversed on a stock like that. Real Good Solar is making an attempt, but not yet there, 152 and higher. Applied Materials, no, we need the stock to go above 1618. JZO still neutral. So a lot of stocks on the solar sector, on the gold sector also as well. A lot of them, they all stay neutral, just like the indices. So it continues to be a moment where for swing trading, you should not open any position. I'm not going to show you today any best breakouts or breakdowns. I think really it's to see what the Fed is going to do. Stock exchanges around the world are waiting, and even all investors here are also waiting to see what the Fed is going to do to determine what's going to be the next cycle on the indices.
Find answers to your questions by emailing your host at btm@decisionplus.com.
5 good reasons to manage your investments with National Bank Direct Brokerage. Commission fees fixed at $9.95 anytime for all clients and starting at only $6.95 for active investors. No administrative fees if you hold at least $20,000 in your accounts. Registered accounts available in U.S. currency. Powerful tools to help you manage your portfolio. Award-winning customer service and satisfaction levels amongst the highest in the industry. To learn more, visit nbdb.ca or call us now.
Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try MarketGurus.tv free without obligation for 10 days in the menus above.
So let's answer these questions here, and the questions about Bombardier. So you bought Bombardier at 159, day trade or short swing, probably at end of its pullback from $2. Yes, it was the end of the pullback at $2. It was the 100-day moving average. I remember when the stock rallied, we said that it was important to take some profit. Now, to short a stock like Bombardier, I think it's not appropriate. The only reason why is because it's below $5, and usually brokerage firms, the margin requirement to short a stock below $5 are too high. So this is why I think for a stock like Bombardier, it would not be appropriate to short. Now you bought at 159, good for you. The stock is continuing to rally. We're now at 168. Now the thing that's positive is that we have the 10-day that has crossed the 30-day moving average, which is something that's good. The things that are negative, that should make you not sleep at night. I would say first we have a overbought situation that continues to go towards the oversold situation, which means that the wave of sellers is still present. And I think that your exit point should be if ever we go below the 50-day moving average, that is in orange, which means if you go below 157 or 150, 58, 56, you get out on a stock like Bombardier. So for me, that would be my advice. Expect that if you're getting in here, if ever Bombardier reaches again 192 or $2, which corresponds to this 100-day moving average, cash in, take some profit, because the Bombardier could just stay there for a while. So this is why I think you took a risky trade by buying that stock here on the moving average, but make sure that you respect your exit point if it goes below 156. And when it reaches that 100-day moving average at 192 $2, take some profit on the stock like that, because I wouldn't like you to hold on to that stock forever and let the stock stabilize, wait for it over and over again. Because don't forget, Bombardier C-Series so far, they're still in the process of getting their certifications. They have not sold not a lot yet, so Bombardier still has their homework to be done and to show investors that they can actually meet these objectives and show that the C-Series will turn out to be a great project. So this is actually the risk that you have on Bombardier, and the technical risk is this wave of sellers that is still present, as you can see here on the stochastics, because we're leaving the overbought situation heading towards the oversold situation. Now, how do you read HVI with the Toronto index? Well, HVI, you cannot take a look at HVI and consider the TSX, because HVI, it's written here, it's for the S&P 500. So it's the inverse of HVU. HVU is the fear index. HVI is the inverse of that. So when investors are feeling less fearful, when investors are a little bit more optimistic on the American markets, HVI tends to rally. It's not related to the TSX stock exchange. Now, as for HVI, would I get into an ETF right now? Well, technically speaking, it's not a buy. There's still a neutral range that's there. I think that definitely ahead of the FOMC announcement, I would not feel comfortable to open a ETF on a position on HVI because I don't know what the Fed is going to do. So for me, HVI is not an ETF I will feel comfortable to buy. I think it has to be watched because it's neutral, testing its resistance. The buying signal, it's at 1022. And if it goes above 1022, 1195 could be the next target, or what could be the next target? 1181 to be more precise will be the next target if it goes above 1022. But ahead of the FOMC announcement, folks, where all investors are eyeing what the Fed is going to do, getting into HVI right now is inappropriate. Now, Manulife, is it a buy now? Manulife is neutral. I think the thing is that if ever the Fed raises interest rate, it's going to be positive for insurance companies because their liabilities are driven by their interest rate sensitive. So whenever interest rates go up, their liabilities go down. So because they have mostly bonds as liabilities. So this is something that's going to be good. I think a lot of insurers are praying to have a rate hike. So watch that. Watch the Fed decision. $21, technically speaking, is going to be a buy on Manulife. But right now, Manulife, with the fact that it's testing a bottom of 2013, 2014, it's testing it dangerously ahead of the FOMC announcement. I will definitely not feel comfortable to buy a stock like that. But as I say, if there's a rate hike, it's going to be positive. Buying signal $21 on a stock like Manulife, but it's not a buy for now because testing a support as dangerously as it is right now ahead of the FOMC announcement is not the appropriate timing to do so. Now, Weight Watchers is our day trade of the day. The reason why Weight Watchers is because it gave 3 entry points. Of course, the stock was not able to pursue its rally. The thing is, what we love with the Weight Watchers is that we saw a wave of buyers that was coming in, so we thought there was the hope that the stock could at least pursue its rally to head towards the overbought situation. The stock also was going slightly above its 100-day moving average, which was something that was positive, but right now the stock went down. So one thing I think we should take into account is that when you're buying a stock for day trading, if the stock confirms entry points on the day trading chart, also take a look at the daily chart. because definitely I think the moving average can give you a clue. So let's say you bought that stock here, right, at 632. Well, you saw that the 100-day moving average was at 691. So 632, and you see at 691 precisely, or almost 680, a little bit lower, we had a wave of sellers that came out. So that could be an indication that definitely you should be cautious. Now, is that stock continues to be a breakout? Yes, it does, but for day trading, it has not paid off as much. If you bought early today, I would say here would recommend that stock on MarketGurus.tv, because since this morning it has been recommended on our top 5. I would say if it goes below 620, right, I would get out on a stock like Weight Watchers. That's only if you get in here. But to get in right now on a stock like that, I'm not so sure. We have some wave of selling pressure that's coming into the markets. It's not as intense, but still holding a position for swing trading, for me, it's not something that's appropriate, especially with so much uncertainty concerning the Fed decision. So that's it, folks. See you tomorrow at 12:30 on the Swing Trading Show. Only one sector where there were some stocks that could be interesting. There were some stocks in the solar sector, some opportunities for day trading on the energy sector, but really for day trading, CG on the TSX has been the best pick so far. But overall, it's all about day trading. That's what we have favored on MarketGurus.tv, and that's why we continue to favor, because all indices worldwide continue to stay neutral and are waiting for the Fed decision on Thursday. So I wish you all a good trading, and see you tomorrow on the Swing Trading Show.